Everyone, welcome to our March 2023 Your Overseas Home virtual event. Thank you for joining us and thank you for tuning in to our session on financial considerations, financial planning and tax in France. My name is Richard Way and I'm an international property journalist and a writer on the Property Guides team, and I'll be hosting this session. We're fortunate enough to have Malcolm McDowell with us, who's from the financial advisory and wealth management specialist Chase Buchanan, and he's going to be talking about taxation and financial considerations in France and doing a presentation for you. So it's great to have lots of you with us today. That's whether you're watching live or you're watching it via the internet, the Your Overseas Home website. This session's been recorded, so we've just lost Malcolm McDowell, I can see, but I'm sure he'll be joining us again shortly. But this session is going to be recorded, so you'll be able to watch it back via the Your Overseas Home website, and I believe that will be up there on Monday onwards, but keep checking back. Bit of a quick background then. This event and the Your Overseas Home team is a service provider that's designed to support you, people buying in France and other countries. So we offer guidance and resources, and we put on events like this where we give you the opportunity to connect with who we regard as established trusted partners in the French buying and relocation industry, and they're the people who we believe you need to be working with when you make your move or purchase in France. So Malcolm's going to do a presentation when he rejoins us. I think there's a bit of a technical hitch which has been sorted. His presentation will last about 15-20 minutes, and then we'll invite you to ask questions. Don't be shy. If you've got anything regarding taxation, financial planning, share it with us, and I expect everyone else could probably learn something as well from your questions and the answers that he gives. So I can see you. Malcolm's back with us. Are you back with us, Malcolm? Hello? He's just tuning in now. Yeah. Can you hear us?
Yes, I can.
Ah, brilliant. Well, I've just done a little introduction. You don't want to hear what I've said about you. That's lucky.
Oh, my goodness.
Not a lot.
Okay, we're back.
I've basically said what you're going to talk about. You're going to talk to us about financial planning, taxation when you move to France. You're from, obviously, Chase Buchanan, but I know you're going to tell us a bit more about your own experience and Chase Buchanan in your presentation. So yeah, over to you, Malcolm, and hopefully we're going to get some questions as well. So
lovely. Okay, good to see you all. Okay, let's do a quick screen share. Hopefully you can see all that now. All right, let's get going. Splendid. Right, okay, so moving to France, the financial and tax essentials. Okay, this is a huge topic, so we're going to kind of do a high-level overview today. Anything that you need, any kind of questions, obviously fire them away. If I can't deal with them all today, then contact me directly afterwards. My details will be at the end of the slide. Okay, right, okay, a little bit about me. I live in the UK now. I've been living here for the last 3 years, but before then, I've been living in the EU. A little bit in the Middle East as well. I've lived in 7 different countries now, so 18 years overseas. So my point is that everything that we're about to go through or already going through, I've been there, done that, got the t-shirt and thrown it away. So it's one thing being able to give advice on it, but it's another thing having been through it yourself. So, please ask me any questions you've got. I've likely to have had to deal with it myself at some point. So yeah, and basically what I'm going to go through today is the opportunities and the pitfalls that come with moving. Okay, mainly opportunities though. All right. Okay, so let's deal with a couple of slides. Some slides I'm going to spend hardly any time on at all. Others I'm going to go through in a lot of detail. So this one is not one I'm going to spend a lot of time on. This is basically the French equivalent to national insurance, okay, in the UK. So not a lot we can do about that. We have to pay that. That is what it is. Next, sliding scale for income tax in France. Okay, so I'm not going to read all the different bandings in case I send you to sleep, but there's a couple of things that are important here. French change this on the 1st of January every single year. Okay, so keep up to speed with it. It's very easy to find out. If you just type into Google French tax bandings, this stuff comes up. Type it in around sort of December, it will show you the new ones coming up in January of the following year. Okay, so that's important. It goes up, it's supposed to go up with inflation, but doesn't always do that. So for example, this one here, 10,000, that was sitting at 10,222 last year. So not quite inflation, but getting there. But another thing to point out with regard to this is you do have a bit of a, what we call in the UK, a nil rate ban. A lot of in Europe don't have that. Okay, so we're paying 0% up to 10,000. Okay, in the UK it's a little bit more, but then they're made up by the fact that you're not paying 20% on everything between 10,000 and 27. Okay, so generally speaking, depending on what you're earning, you're going to be paying slightly less income tax in France. Not always the case, but generally speaking, that's how it is. Okay. Right, this comes onto a bit of a theme when it comes to French tax. So the French tax authorities like to come after high net worths. That's the general theme of everything you're going to see today. All right, they do like to do that. There are ways we can mitigate that for high net worths on the call, no problem. Speak to me afterwards, and we'll touch on a few of those points as we go through. But here is an example of that. So exceptional tax on high incomes, for individual taxation, and for couples as well. If you want to try and mitigate that, then speak to me. It depends on your circumstances as to what we need to do. But yeah, contact me after the call. My details at the end of the slide. Okay. And it also does depend on double tax treaties as well. So that's when it gets a little bit. Okay, but speak to me after. All right, okay, so this is one I like to spend quite a lot of time on because it affects most of the people. So this is the real estate wealth tax. A lot of nonsense written about this on the internet. So let's cover exactly how it works. You only are subject to this tax once your property is worth, in France, is worth more than 1.3 million. Okay, not 800,000, 1.3 million. And then you're only paying the difference then between 800,000 and 1.3 million. Okay, and then the bandings thereafter are pretty self-explanatory. All right. Another thing, if you have properties that you're getting rental income from or not getting rental income from, and they're outside of France, you move to France, you do not pay any of this real estate wealth tax on those properties for the first 5 years. Okay, so if you turn up in France with a whole lot of properties, that is okay. Okay, a lot of people spread a lot of nonsense on the internet about that, you're going to get taxed and so on and so forth. Yes, you are, but you've got 5 years to do something about it. Okay, that's plenty of time. Okay, so, and there's other ways of mitigating this. Again, talk to me at the end of the call if you're a big landlord moving to France. Okay, that's something that we can help you with. But remember, nothing to do when you go over 800,000. It's when you go over 1.3 million for your property in France. Okay. Next, okay, so I won't spend too much time on this, but it's something I do need to mention, especially for the high net worths. This is a tax that doesn't exist anywhere except for in France. This is on movable properties. So anything that's not bricks. So if you've got a Lamborghini that you rent out, if you've got fancy pictures, you've got a few Banksies in the house, or you've got some very nice furniture that seems to be going up in value, then this applies to you. Okay, this doesn't exist in the UK, as you know, but it does exist in France. Okay, and they slap on a 30% tax on gains, not on the value, on the gains. So it's nothing to get too upset about. if indeed you fit into this bracket, afterwards, find ways of mitigating. Okay. Right, pensions. This one I will spend some time on. Okay, so this is important. So there's two things to think about here. One is pensions that are in drawdown, and one is pensions that are not in drawdown. Okay, so the pensions that are not in drawdown are what completely different to the ones that are in drawdown. So let's deal with the ones in drawdown. Okay, let's assuming you're drawing down on a few pensions. Doesn't matter what they are, state pension, occupational pension, whatever. You then move to France. The way you deal with this is you contact the tax authorities in France as soon as you turn up in France. They will then take a piece of paper, form, and give it to you, which you then fill in. They will then stamp it. That then goes to HMRC, His Majesty's Revenue and Customs in the UK. Okay? They will then stamp it. That then goes to your pension provider in the UK, and they will then pay out that pension properly, and it will have tax taken off it in France, not in the UK. So don't worry about this sort of thing. If you don't sort that out, it gets really messy. Because since Brexit, what the wonderful HMRC have started doing is slapping emergency tax codes on your money coming in from the UK. So let's avoid that. It's easy to avoid. Talk to the French authorities. They will then talk to HMRC. They will stamp a piece of paper. You then give it to your pension provider in the UK. All right. Next is the pensions which are not in drawdown. Okay, so let's cover this, and I'll give a long story that's made very, very short. So if you've got a pension that's not in drawdown, you really should be seriously considering it, getting it out of. The reason for it is follows. Basically, back in 2004, you had what's called the European Tax Code. And what that was is an exciting piece of legislation, all to do with the freedom of movement of people and the freedom of movement of capital. Okay? Capital obviously includes pensions. So all the European Union were trying to do is make the pension system in the EU fairer and update it a little bit, because it has, it was a little bit, they needed to drag it into the 21st century quite. Because people were not working for a single company for years and then drawing on their pension. They were doing 1 year here, 2 years here, 5 years there, and sometimes in different. So all the EU were trying to do is make the system fairer. And all they were really trying to do is say, okay, if you're living in Spain and you've got a pension in Portugal, why are you paying Portuguese tax? Yeah, if you've got a pension in UK and you're living in France, why are you paying UK tax? That's not fair. Be able to take your pension with you. It's capital, you should be able to move. So that's all they were trying to do. What HMRC then did is made it legislation. They did that on the 6th of April 2006. It's often referred to as Pensions A Day. And ask me why they put it. Okay? Pensions A Day, and if you type this into Google, all this stuff comes up. None of this is new news or fresh off the press or controversial. Right? This is all very old. So from that day onwards, anyone who used to have a UK pension, and was now no longer residing in the UK, doesn't matter what colour their passport, they had the right to take that pension out of the UK and take it with them into the EU. Right? And what HMRC did not foresee in any way, shape, or form, that this was going to mushroom into a massive, massive industry. In the first few months of 2006, nothing happened. Later on, not much else. And in 2007, the first transfers started happening when people started to understand what the legislation did. And then it turned into a torrent. Okay, we don't have millions leaving the UK now in pension schemes. It's billions. Okay, it's billions every single year. So then there are huge advantages, obviously, for moving them out. That's why so many people do it. So I'm not going to go into those now. That's for another conversation. But if you have a pension that's not in drawdown, you need to speak to me. And the main reason for that is this. We had a little event a couple of years ago called Brexit. Okay, and so that has emboldened HMRC and a few other outfits as well, the FCA and the UK government. And they have slowly tried to squeeze this to the point where I think, well, it's generally accepted in the industry, they're going to knock it on the head. They're no longer beholden to the 2004 directive. So very soon they're going to be stopping these transfers out. So anyone who can get it out before they cut it off, finish it and stop it, bully for you, well done. So if you've got a pension that's not in drawdown and it's your intention to move to France, or you're already in France and you haven't moved it yet, speak to me. And you need to speak to me today. Okay, you need to get in touch. Because I don't know how much longer this is going to be entertained from the UK government. All stuff, money they can't tax directly. So of course, when it leaves the UK, they don't like it. Okay, and HMRC don't like it at all. Right? And all this legislation, everything I've just spoke about, you see all of it sitting on the HMRC website. Okay, it's their idea. All right. Okay, next, inheritance tax. Okay, this is a massive topic, so I'm only going to touch the surface of it. Okay, again, speak with me, but there is a double tax agreement between the UK and France. It is one of the few agreements that covers inheritance tax. So if you're living in France and you're a tax resident in France, you immediately come under the French inheritance tax. You do not come under the UK inheritance tax. Well, people don't know that. This is a little bit more odious, we would say, than the UK setup. So the UK setup, you've got a tax-free allowance that is anywhere between 325 and a million, depending on your situation. And then you pay tax above that. In France, it's not like that. Okay, for each child, you're looking at 100,000 euros, and then you have a sliding scale going upwards thereafter. If you're high net worth in France, okay, and if you're passing on more than 900,000 euros, more than 1 million euros, if you include the 100, then yes, it gets very odious. Okay, so there are ways of mitigating this, but you can't do it on your deathbed. Okay, this is something you need to organize when you arrive in France. Okay, so please get in touch, please talk to me, and I'll explain how that all works. Okay, next, tax on traditional asset portfolios inside and outside of France. The French tax you on worldwide assets. They don't care where it is, whether it's in the UK or whether it's in Timbuktu, they will tax it. So from January 2018, interest and dividends on your traditional portfolios are subject to the 30% flat rate, okay, or income tax. Okay, portfolios which are held in a capital redemption bond or life assurance policy, you're subject to taxation, but only on partial or surrender policy. Taxation level gets complicated if you've got money sitting in those. However, generally speaking, if you've got money sitting with a bank which is on their platform or sitting with a trading account, execution only, something like that, then the French will tax that, and they'll tax it on the growth. And you'll have a choice between 30% or income tax. Yeah, very simple way of mitigating that. All the French are trying to do is get you to France compliant, take that money into France, and then put it into one of their vehicles that they approve. Okay, so you can keep in exactly the same investments if you want to, just get it under the French umbrella. And they've got one particular one which is very, very good. Well, it's the only one on the market really. Think of it as like an ISA on steroids. Yeah, it is very, very good. It mitigates inheritance tax. It mitigates capital gains tax. It's the only way forward. So if you have investments which are outside of France, don't think you can just leave it there and hope that the French authorities don't find out about it. Yeah, the problem that you've got is that you've got still a thing called common reporting standards, and the banks, they talk to each other. They're required by law to talk to each other. Yeah, trading platforms as well. They report that. As soon as they find out that you've got a different tax code, they'll be telling the French authorities all about it. Okay, so gone are the days where you can hide stuff in offshore bank accounts. those days are slowly going, not completely gone, slowly going. Okay, so talk to me if you're in that situation. We can mitigate it. It's very simple. Just use the French combined method. Okay, and they realized that they had to do this back in 2017 because they realized that no one was moving to France. So they put that legislation in around that kind of time, and since then it's had the desired effect. So yeah, you're in that situation, maybe we can get that tax mitigated. And then finally, yeah, look, they tend to come after high net worths in France, but there's ways to mitigate that. Yeah, and if you're not a high net worth in France, there's stuff that you still need. So, like I said, we all have to pay tax. Tax a given. Yeah, but there's no need to leave it. Yeah, and so if you've got any questions at all, contact me directly. My details are there. I'll leave them on the screen for the rest of the chat. And yeah, that's me done, Richard. So over to you. And then
Right. No, got lots of questions in my head, but we've got well, we've got some questions in from listeners, which is great. I'll just work my way down then. So the first one is final salary pensions, UK or France. What's okay? I guess the other question from that is what are the options with final salary pensions?
Yeah, so that's a good point. So final salary pensions, you can still move them. Yeah, it is difficult to move them, and your scheme in the UK will fight you. But at the end of the day, there's nothing to legally stop them from making you do that transfer. Yeah, it is done has to be done on a case-by-case basis. Yeah, we need to find out from you what the transfer value is, what the guaranteed minimum pension is. So what are they legally required to pay you? And all sorts of other information. What's the funding levels? What is it invested in? All these sorts of things. We need to know that information before we can. Yeah, so if you've got a final salary pension and you need to move that, and most people do move them, yeah, but in certain circumstances, people don't, yeah, then you need to contact me and we need to get more information from your scheme. Yeah, once we have that, then we can start giving advice. Yeah, you cannot move a final salary scheme if it's already in drawdown.
Okay.
You can move, this is why that question is so good. You can move a defined contribution pension that's already in drawdown. Okay, you can move one of those. That's the only one you can move, by the way, defined contribution. But a defined benefit that's already in drawdown, that's it, all bets are off. Okay, you then have to go to the French authorities, like I mentioned earlier, go to the French authorities, tell them you've got a pension that's already in drawdown, and then tell them, look, I want to pay French tax on that, not UK tax. And then we'll go through the procedure. They'll go through the procedure earlier with the stampings. Yeah. But if it's not in drawdown, you need to talk to me straight away. And especially that one, because moving a final salary now takes minimum 5 months. And don't let anyone tell you otherwise. Minimum. And there are some, you have to get a separate report from a UK IFA as well. But I'll explain all that stuff to you. That's straightforward. But it is, it's long-winded and it's painful. They will fight you.
When you say they'll fight you, they just put up lots of hurdles, do they? They make it.
Yeah, they just put up lots of hurdles. There's all sorts of tactics they can use. I can give you a list. I've seen everything now. Yeah, I mean, everything from claiming that the scheme that you're moving to is a scam, all the way through to just basic stuff like not picking up the phone, not answering your emails, all that kind of stuff.
Really?
And the reason why they do those delays is they know that new legislation is coming. So they try and delay it as much as they can, praying that the legislation comes while the transfer is in progress. Because if the money hasn't moved, then they don't have to move it if the legislation changes. Yeah. So, and we have precedent for that. Yeah. When HMRC turned around and stopped all the transfers in 2012 to Guernsey, they literally did that overnight. Yeah. And I remember that very clearly because I had 10 cases myself, which are all ready to go to Guernsey, and I had to go back to the client and move them to a different jurisdiction. Okay. And it was painful. Okay, anyone who had moved the money, had transferred before that date, they were absolutely fine, and they have upstanding overseas pensions to this day. Okay, no problem. But the paperwork was signed and the money hadn't physically moved. I had to go back and redo the whole thing.
Rascals.
Rascals, absolute rascals. Their behaviour has been terrible, absolutely shocking. That's another story.
Great, this is great advice. We've got a few questions about people who aren't resident. We'll get to those. Teresa's asked the name of the facility or the wrap, which you referred to as an ISA on steroids. Is there a name for that?
There is a name for it. It's referred to as an assurance V. Assurance, not insurance. Assurance V, VIE. So assurance, one word, V, next word. Yeah. Again, none of it's new or fresh off the press. Every single bank in France does one. However, I would say personally, the ones, not all in France, by the way. There's also ones in Ireland, based in Ireland, and there's also ones based in Luxembourg. Okay, I think Isle of Man as well. The ones based in Luxembourg and Isle of Man are the best ones, in my opinion. But we can discuss that closer to the time. Yeah, they don't. The French ones are a little bit expensive. So, but yeah, that's something. But I'm agnostic. At the end of the day, what's best for the most important thing, so we can deal with any of those.
Great, thank you. If you've got the option of getting money out of a foreign pension as either a monthly payout or a one-off payment, lump sum, is there any difference or is there any benefit to one or the other in terms of taxation?
Yes. If you're saying a foreign pension, I'm assuming you're saying anything that's not French.
I'm assuming that.
I'm assuming that. But anyway, it's the same for the French one. So no. So yes, what you need to be careful of is what that previous slide that I showed earlier with regard to the income tax banding. Okay, because if you then take, let's say you take out, you've got 250 grand in a pension, and you take it all out as a lump sum, which you're allowed to do now, yeah, which the UK government allowed, and you can do that with an overseas pension as well. You're going to be dropping yourself into the highest tax banding, and it's going to be painful. Okay, pensions are there to last for a lifetime. That's the whole purpose. So it's not something I would naturally recommend. However, if you've got money in other places, got other pensions coming on, this one you just need to say buy a house or do something. You have something specific for it, but you've got other pension money somewhere else. Then okay, go for it. But you will get punished by the tax man because it will drop you into a higher tax bracket. Yeah. So just be aware of that. You can do it, and we're all adults. We all know what to do with our money, right? But just be careful. Probably best to use it for what it's designed for as a pension and just take an income. Paying a lot less.
Great advice, thank you. We've had some questions with just one clarification on the taxes if you're a second homeowner. So the slides you showed and you had taxes on worldwide assets, etc. Can you just outline if you're only a second homeowner, so you're not tax resident in France, what taxes will apply to you? Okay,
yeah. So again, it goes back to that presentation. So if you've got a second home in France, then that counts towards the 1.3 million banding. Okay, right. Any residents in France count towards the 1.3 million banding. Okay, so just be aware of that. If that second residence is not in France, or any other residents are not in France, you move to France, you've got 5 years to do something about it. But your second residence in France, yeah, they punish you a little bit. And a lot of people will end up over that 1.3 banding. So, yeah, if you want to mitigate that, speak to me. But in terms of if you've got anything outside of France, like I said, you've got 5 years to do something. Yeah, but you're only going to get taxed if you've got the 2 residents in France or any more than that. you're only going to get taxed between 800 grand and 1.3 million. Yeah, if it's above 1.3 million, and then the other bandings apply.
Okay, and that applies to a second home. If you're
Correct.
living in the UK, tax resident in the UK, that applies. That tax does apply once it's
No, only if you're tax resident in France.
So if you're a tax resident in the UK,
yeah, only if you're tax resident in France. If you're tax resident in the UK, none of what I spoke about applies to you.
Perfect.
Yeah, and if you've got 2 homes over in France, then that's a different story. And you're tax resident in the UK. Sorry, I think I misunderstood. You're tax resident in the UK and you've got 2 homes in France. Contact me.
Right.
Yeah?
Okay. That then they.
Yeah. It gets complicated. Yeah. But because they're changing those rules all the time, the French.
Yeah.
Right? So yeah. But they punish the second home. Yeah, they do that.
And then finally, another question relating to a second home, a holiday home. If you rent it out for part of the year, presumably you're going to have some form of income tax on that, or tax on.
Yeah. All it is it's a lot of countries have a different tax for rentals than they do for normal income. The French don't. It all comes under income tax. If you've got a job and then you've also got money coming from rentals, it just goes on top of that, and you go up into our home.
So if you're living in the UK, you have to file a French tax return then to declare your income.
Yeah, if you're living in the UK, oh my goodness, it gets. Okay, if you've got more than one home in France and you're living in the UK, yeah, it gets. But this is, contact me, talk to me. But reality is that this presentation is largely for people whose intention it is to move to France and become French nationals. Look, I'm more than happy to help anyone who doesn't want to go there and just wants to spend less than 183 days every single year there. One of their 2 homes, whatever it is they want to do. Yeah, give me a call.
Brilliant. Well, we've run over time. There's so much we could talk about, and there's a lot of information. I
warned you, we're only going to touch the surface because it's a big topic. I could write a book on it. But yeah, just like I said, I'll share this again. Just well, you've got my details, you guys.
Got your details. You're going to be in your booth, aren't you? Chase
I'm going to be in my booth, so any questions you've got, and then contact me directly as well. Feel free.
So make use of Malcolm being here and making himself available. Thank you very much, Malcolm. Much appreciated. I've certainly learned a lot. I hope it's been useful for everyone listening. So what else have we got? We've got another French one after this at 2:00, which is about the legal aspects when you're buying a property in property law. So that's useful as well. And this session has been recorded. Some of you were asking, so you can actually watch it again from the Your Overseas Home website. I think it's going to be posted from Monday onwards, so you can watch it over and over, and you can send it on to friends, family, whoever you want. So that's great. So thank you very much, everyone. Again, thank you, Malcolm. From Chase Buchanan. Good luck with your plans to buy or move to France, and enjoy the rest of the day. Thank you.